All right, welcome to this explainer. Today, we are diving straight into the ACCA Business and Technology Notes to untangle what I like to call a fundamental illusion. It's one that trips up so many people: cash versus profit. Now, I know it sounds like a totally simple distinction, right? But the disconnect between these two concepts is absolutely massive. And let me tell you, mastering it, it'll completely change how you view a business's true health. So let's just get right into it.
Okay, think about this for a second. If your business makes a massive profit, why on earth might your bank account be completely empty? Seriously, it's a terrifying scenario for any business owner. But the crazy thing is, it happens all the time. You look at your income statement, you see this incredible profit margin, you're popping champagne, and then you check your bank balance to actually pay your suppliers, and there's nothing there. Literally zero. How's that even mathematically possible? Well, this high-voltage question highlights a massive disconnect that we're going to decode today.
And that brings us to the absolute golden rule of this explainer. Profit does not equal cash. We literally cannot ever conflate these two things. Honestly, forgetting this incredibly simple rule is exactly how the examiner will try to trick you. They'll lay out this beautiful, perfect scenario where a company is just booming, and then bam, they slip in a sneaky question about cash flow, just to see if you've fallen asleep at the wheel. So remember, profit absolutely does not equal cash.
When we put these two concepts head-to-head, it is just fascinating. On one side, we've got profit. This is basically a theoretical accounting concept, constructed on paper using a very specific set of rules. But on the other side, we have cash. Cash is hard physical reality. It's the actual money you can hold in your hand or physically see in your bank portal. One is literally just a theory of performance, and the other is the tangible lifeblood of your business. Let's break down exactly why they're so fundamentally different.
Let's deconstruct profit first. Profit is an accounting concept based entirely on the rules of accruals and matching. So what does that actually mean? Well, the matching principle dictates that we record income when it's earned, and then we match the expenses incurred to generate that income in the exact same period. And we do this totally regardless of when the money actually changes hands. Profit is simply a mathematical indicator of performance over a given period of time. It's built by accountants for accountants following these strict accrual rules.
Now, in stark contrast, cash is the hard reality of actual money. There are absolutely no theoretical rules here. No matching, no accruals. It is a binary state. The money is either in your bank account or it isn't. You cannot pay your employees with an accounting concept. You can't pay your electricity bill with the matching principle. You need actual hard cash. And this brilliantly illustrates why a business can be highly profitable on paper, yet completely bankrupt in reality if they just run out of cash.
So how does all this theory actually play out in practice? Well, the absolute best way to see how these concepts completely diverge in real time is by walking through a totally standard business transaction, the credit sale. A credit sale is when you sell a product or a service to a customer today, but you agree to let them pay you for it later. It's standard business practice, sure, but it creates this immediate accounting illusion. Let's map it out. Okay, on day one, you make a massive credit sale. Instantly, under that accruals concept we talked about, your revenue goes up, meaning your profit spikes that exact same day. Your income statement? It looks amazing. But fast forward to month 2 when the cash is finally received. For an entire month, sometimes even longer, you've had a massive profit recorded, but absolutely zero cash from that sale to actually show for it. The core disconnect is right there in the timing. The profit is immediate, the cash is severely delayed. So when we're prepping for the exam, there are two massive mistakes you've got to avoid. Mistake number 1, assuming profit equals cash. I know we've hammered this home, but under exam pressure, it's so easy to slip up. Just don't do it. Mistake number 2, ignoring timing differences. That timeline we literally just walked through, that's a timing difference. The profit was recognized on day 1, but the cash didn't show up until month 2. If you ignore that gap between when a transaction happens and when the cash actually settles, you are going to fall right into a trap. And speaking of traps, here is a classic scenario you will likely face, straight from the source notes. The examiner will state something like, a business has profit earned but no cash, and then they'll ask you, what happened? They want to see if you can identify the exact real-world transaction that causes this divergence. So are you ready to crack that code? The winning answer. The key to unlocking that question is the credit sale. When you see the phrase profit earned but no cash, your brain should immediately lock onto credit sale. As we just explored, it flawlessly explains this timing difference scenario. You did the work, you earned the revenue, your profit went up, but because it was on credit, the cash just hasn't arrived yet. Boom. You've identified the dynamic, solved the puzzle, and secured those easy points. I want to leave you with a really fantastic summary from the ACCA notes that basically distills everything we've talked about today. Profit is accounting, cash is reality. Take this mantra straight into your exam hall with you. Seriously, when you get a tricky scenario about business performance, just repeat this in your head. Profit is a set of rules, but cash is what actually keeps the lights on.
So, I'll leave you with this final kind of provocative thought. Next time you look at a highly profitable company, whether that's in an exam scenario or just out there in the real world, will you fall for the accounting illusion or will you demand to see the actual cash? Try to hardwire this concept into your brains, because once you understand the mechanics behind this illusion, you really unlock a much deeper understanding of business. Keep this focus, take this knowledge, and go absolutely conquer the rest of your accounting revision.